co-speaker, Devanshu Bhatt. He's the SVP of Treasury at EKA Software. He's a veteran in the arenas of Treasury, finance, and technology. He has more than 20 years of Treasury and finance product management and develop experience, and we are proud to have him with us today. Welcome to the webinar, Devanshu.
Yeah, it's my pleasure. Thanks a lot, Ernie. Happy to be here.
Thank you so much. Hopefully the first of many webinars together. We are going to become a sought-after speaking duo. So first and foremost, I want to thank our webinar partner today, EKA Software. They share my commitment to not only thought leadership, but also to serving the Treasury and finance professions. They have some amazing content on their website as well, so I encourage you to visit their website after the webinar. Of course, there are exciting housekeeping items. Those of you who are attending interested in receiving CTP credits today, you'll have to answer all the polling questions, remain on for the duration of the webinar, and take a short survey at the end of the webinar today. For those of you who have attended my webinars in the past, we have had some procedural changes with AFP, and so it's going to take longer to get you your certificates of attendance, and so I appreciate your patience as I'm doing the best I can in that turnaround. If you have any questions regarding CTP credit or have an interest in receiving a copy of today's presentation, please send an email to Ernie@treasurywebinars.com. Again, that's Ernie@treasurywebinars.com. So let me go ahead and give us a high-level overview of our agenda today. So first and foremost, we're going to start at a high level, right? And we're going to talk about Treasury success, the role of cash management. We're going to review some survey results from a survey that I did this year. And so we tried to look at how companies are defining success, right? How they're defining it. Is it the right way to do that? What metrics are used? And so we'll start. And what we found, and not surprisingly, which is good, I agree with it, Treasury success, a huge part of that is cash management. And so then we'll delve in to the 10 dimensions of cash management success. There are many pieces that really go towards, right, what that success means. And you should define that success at your company, formally define that. So, and then what we'll do is, so we'll get into the theoretical things, I'll do that. And then I'll turn the floor over to Devanshu, and he's gonna really show us how you can optimize all these dimensions of cash management. He's gonna show us some screenshots from a leading edge technology provider. And what's really amazing to me is it's a visual approach, right? We're all used to looking at spreadsheets, but if you have the right dashboards, right, how do you get the right information to the right people, right, at the right time and help them make data-driven decision-making? And so how can we leverage leading software to empower data-driven decision-making through dashboards, right? Easy. One of the things it does, it helps us not only direction, but also helps us ask the right questions and also make sure that we're optimizing those dashboards for the consumers of those dashboards. And so the same dashboard for everyone, the same report to every dashboard, that's really not what matters. There's a lot of moving pieces to optimizing cash management. And then of course, as always, we'll wrap things up with some key takeaways and actually some specific recommendations for you to follow as well. So we're going to start off cash is king. You know, I'm always all about that. And so we found that even more so up to the CEO boards, everyone in the world, since COVID has really taken hold. But before we really delve in, into Treasury success, how that's defined, how others are doing that from the survey I conducted, I want you to share with me what's the most important metric related to Treasury success of those listed at your company? Is it cash forecasting accuracy, DSO? Is it the cash conversion cycle, cost of capital, or is it employee engagement? So I appreciate everyone's consideration in answering all the polling questions here today. Those of you interested in receiving CTP credits, you'll have to answer all the polling questions. I would sincerely appreciate everyone just taking a moment to go ahead and push the button on there for us. And then what we'll do is we'll take a quick peek at the results. I'll see if anything looks a little bit surprising to me. I'll probably ask Devanshu to see if any of the results are surprising to him. Then what we'll do is we'll kind of level set, right, where the audience came in through the results versus the survey results that I had seen, which were results from over 250 companies across the US. So I'm gonna go ahead and give you guys a few more seconds to go ahead and answer the survey question. All right, thank you so much everyone for doing that for us. Let me go ahead and take a quick peek at the result, and I'm not surprised. The leading result is cash forecasting accuracy. And so I've done webinars about this in the past. To me, we put way too much into that. Cash forecasting accuracy is important, but it's not driving a decision. It empowers, right, better decision. It doesn't help us. It's not, the cash conversion cycle, right? How are we optimizing the movement of payments? And so that should be part of it, right? We shouldn't say, Treasury, if your cash forecasting accuracy is less than 90%, you're terrible. No, that's not the way it works. So what I'm trying to do myself, it's a longer term project, is let's help people define success, what that should be at their companies, right? What's under your purview, what matters, what impacts the bottom line, and then let's define success and make sure that our senior executives understand that as well, right? How do they define success from our department, right? And one thing you'll notice, I'm giving away a little bit, you'll see that there's nothing on here about risk management. Well, I'll get into more of that later. There's a reason for that. And so what we found from my surveys is that really the way that Treasury gets that seat at the strategic table is really related to risk management. And we're not even using that as a success metric. And so I see that as a little bit of a problem. We have only 4% of employee engagement. That's okay at that. That's where I would be. Cash conversion cycle for me, those of you who listen to me know that that's my thing. So that's where I would put that. I'm not surprised. Devanshu, is this about what you expected? Any thoughts here?
Yeah, I mean, I think I really like the way you have posed the poll as well. So cash forecasting, not generically, but talking about the cash forecasting accuracy. So I think
Yeah.
in today's time, accuracy is very, very important.
Yeah.
Any type of model can actually claim to do the cash forecasting, but how accurate is your model is going to drive your success. And very, very impressed by that cash conversion cycle. So 20% people are saying that that is important. I
Yeah.
feel that's even more important than 20%.
Yeah.
So right on the money. So it's right on the cash. So it's true. It's nice.
All
That's
right.
pretty much it.
Thank you so much. Appreciate that. Given your perspective. So Devanshu has interaction with Treasury professionals across the globe. And so I'm always going to bring him in he has a little bit of a broader global perspective than I do. So I appreciate your thoughts. And so here's some results from the survey that I done. Again, over 250 respondents. Of course, there's survey reports if you're interested in those. But if we look at how companies define Treasury success, I was actually happy. Sorry. If you said cash forecasting accuracy, but look how far down that is, right? We have free cash flow, operating cash flow, which I think are the right. Now, I expected the numbers to be a little bit higher. So what I asked here was, which of these are metrics of success, not which is, what it is, because you'll see those percentages add up to way more than 100%. And so what really was pleasant surprise to me was employee engagement. So we saw employee engagement at 30%, and to me, that makes a lot of sense. And so if you really take the value of Treasury, right, up to the company level, what is it that really drives your company success? Well, your customer satisfaction, right? So what is it that allows us to deliver value? It's our employees, right? The more engaged our employees are, the more we support them, the more we make them productive, the more value they're going to offer to the company, and we're going to offer that to our customers. And so if someone asked me, how do you would define success at your company, right? I would say that at any company, I would look at customer satisfaction and employee engagement, because everything else flows up to that. So interesting to see. Note, I've also looked at this, sliced and diced it. Those percentages are lower than I would expect. I've done the same survey year over year, and so I'm not seeing as high numbers as I would like, but just kind of a little side note there. And so don't be afraid. There's a whole lot of information on here. Again, if you'd like a copy of the slides, I'm happy to provide those to you. Just a little bit deeper dive. I wanted to see if those metrics varied, right, by company size. Maybe free cash flow is more important or less important. So I just wanted to show you that I know how to use Excel graphs, but I think this one's a little bit more transparent and consumable for me to help explain. But if you just look at the top 5 or 6 metrics by company size, you'll see a cost of capital was for medium, and then operating cash flow was for enterprise. I think one of the reasons that's so high was that obviously the survey was taken during COVID, and so obviously as the dynamics have have played out. The importance of cash and operating cash flow and knowing what's coming in, especially on the AR side, was really important. So the enterprise size was as well. We also had a little bit different in enterprise because bank fees and bank fee trends are tremendously important, as that's money going out the door. So Devanshu, anything here really stand out to you, or anything that you would see as maybe you would think would be more important as you go from a smaller company to a larger company?
Yeah, actually, interestingly, the employee engagement, I also
Yeah,
agree that that is really important. So,
yeah,
as the role of a treasury function becomes more and more strategic, they start contributing towards the top line. So, my belief is that if we take care of our employees, they will take care of the customers, and that will drive revenue. Normally, treasury is considered as taking care of the bottom line, which is to save cost.
right.
However, we can actually partner with employees and actually make a difference to the top line, which is the revenue. So really awesome to see that that's right up there. Uh, so yeah,
Absolutely.
that's
Thank you so much. I agree. I should have pointed that out. But yeah, to me, that actually floored me. I was like, employee engagement, thank you. I've been on my soapbox about this for a long time. So I'm thrilled to see that that is such an integral part. As you said, right? What we want to do is make our internal customers happy, right? Across our company, right? And what that does, it empowers them to offer more value as well. So it's a team effort, right? If you're looking at the CFO level, what they're supposed to do is impact performance across the enterprise. Well, in Treasury, we can do the same thing. We have the skills, right? We have the data, we have the reports, right? We have a company-wide view that very few share, even the CFO, and so we are tremendously valuable. Now, to get that seat at the strategic table, we need to make sure our C-suite understands that, right? And so that's why defining success is so important and communicating that. And as I've said before, I would have my CFO and my senior team involved in what is Treasury success. And so we're all on the same page. So let's talk about what I see as the 10 dimensions of cash management success. I mean, there's a lot of different dimensions. Most of you, if you haven't been involved a little bit in the weeds of cash management, there's an awful lot that goes on. Part of that for me is accounts payable and accounts receivable. I believe that they should report up through Treasury. So any kind of cash movements is under our purview, right? Manage the cash, everything going on, all movements of cash within the company, outside of the company, coming into the company. We're protecting assets, but optimizing working capital, optimizing our capital structure. So sorry to be a control person. Cash is king, cash is treasury, right? And so here's cash management done right. So what I'll do here, I'll go ahead and I'll briefly go through each of these 10 dimensions, so I make sure that Devanshu has enough time to show you what I believe is the most powerful part, right? I can tell you the theory, but to me, when I look at the technology it's actually mind-blowing to me. Back when I was in Treasury, I had blind spots all the time. I didn't have visibility into things. If I wanted to get some of the views that you can have, just a consolidated currency position, I mean, that would have taken me probably a week to get. So it's really incredible. And so what done right, what you're going to mitigate the cost of making payments. If your company doesn't do this, you should estimate the cost of making payments. Those costs are going to vary by payment type. And when I was in Treasury, we didn't pay enough time to optimizing, right, the types of payments. And so that's important. You optimize the payments and then the timing of payments, right? And so we all know the time value of money. And so let's make sure that we're taking as much control as we can, and we foster that control through supplier relationship management. So we also mitigates payments related risk exposures, right? And some of us, when COVID really took hold and we had to work remotely, all of a sudden either those exposures changed, or if your weaknesses became glaring. And some companies even had trouble making payments in these paper-based things, but also, of course, counterparty risk, your employees' risk, right? Payments related risk exposures, right? You have people, process, and technology. So each of these is a webinar in and of itself, and we've done those. And so if you want more details, please let me know. We want to optimize the days payable outstanding. Notice I didn't say minimize that. And so we need to make strategic decisions, right, about our DPO. And so I often see, inflate, to 90 days. Well, that doesn't always make sense with other discounts to be had, right? There's room for negotiation for your company, especially depending on your cost of capital and obtaining funds. But oftentimes, most times it makes sense to take those discounts. We mentioned this earlier. We want to mitigate counterparty risk exposures. We got to have visibility into that. Those of us who have been in Treasury a little bit of a longer time, this really hit us pretty hard back in 2007, 2008, 2009. And we were asked, what is your risk exposure, for example? What is your risk exposure to our exposure to Chase? And you'd be like, well, I have bank accounts. And then they would be like, oh, don't you have money in the pension fund? Don't you have other services with Chase? And they're like, oh, yeah. And so we need to mitigate those counterparty risk exposures. We need to have policies in place, right? We got to be able to see those, monitor those, and manage those. We also want to minimize DSO, right? AR side. We do want our cash as quickly as possible. I'd say I have a hard time saying I don't want my cash quickly. We want to mitigate the AR processing costs. I did a webinar yesterday on the nightmares of cash application. Those of you who are in Treasury know that all too well. And so that's the other side of it, right? And there's so much inefficiency just built in the mechanics of AP and AR that it really is valuable to go into the weeds, understand the cost. There's a tremendous amount of inherent productivity drag, right, that's in these processes. And then when you take that away, it's not about reducing headcount. It's about empowering more time on value add activities. Cash management done right optimizes your relationship with banks, whether they're giving you services, minimizing your bank fees, minimizing your cost of capital. You're optimizing relationships with your suppliers, so you can take control, right, of how and when you pay, and you want to optimize interactions with customers so you can control when and how you get paid, right? And then above it all, right, what we're doing now, you want to optimize cash movements in currency positions, and so everything else kind of flows up there. So Demonstru, I know I've covered a lot of things on this slide. Is there any point here that you'd like to comment a little bit on for us?
Yeah, absolutely. So I think the first 3 points which you are saying, that days DPO or payment related risk or cost of making payments, I think those are the low hanging fruits, and we can easily make a difference because that's in our control as a company. So we can automate, we can do electronic payments and those kind of things, and we can right away get the biggest bang of the buck fast. So it's good that we are actually keeping it at the top 3. And then also we need to always weigh in whether making payments early versus borrowing capital, what's more fruitful. So see it together and then make a decision. And then comes the hard part, which is controlling how someone else is going to pay money to you, the account receivable part. So if we can make a difference there, then obviously we have actually done the right things. So 100% agree to your assessment there.
All right, thank you so much. And so again, we'll take a quick pass at all these. A lot of the slides here are for you afterwards, right? And so what we want to do is, like, you don't want to feel like you're getting behind. Just listen to us, get what you can, and then go back. And then it's really good sometimes to take a look afterwards and really dive in there. And so just some really high level things in each area. So what is it mitigating AP costs? What does that look like? First of all, I probably say this in every webinar, probably over 500 now. You can't manage what you can't see, right? So we need visibility into the accounts payable process, all the interactions with our suppliers, optimize the process from supplier onboarding all the way to the end through when payments get out, when we get things out the door. And when we pay the invoice. And so we want to minimize the time spent on non-value activities by all parties involved in the AP process, right? If you've never looked at it, there are an awful lot of parties that get involved in the AP process, including Treasury and finance professionals, right? As approvers, maybe we're approving ACH batches, maybe we have over a certain number of check limits. And so managers and approvers and procurement, there's all these different parties, right? We need to make sure we're making it easy for them. We don't want to have bottlenecks. We don't want to have people wasting their time. We don't want to have people on the phone. So a lot of times there's an asymmetry of information. with your suppliers creates frictions, creates issues. Talked about this early. You want to manage the types of payments made. In general, the cost of checks is much higher than electronic payments, right? And so you don't want to you don't want to force you don't want to force a payment method type on your on your supplier. However, you should collaborate, right? In general, I would give this advice. You want to move to electronic payments if it makes sense and your suppliers understand the cost. Yes, we can do credit cards, virtual cards, ghost cards, right? And get the benefit of that. But let's not force that on our suppliers, because if you're not upfront with them, and I just did a survey, reported over 30% of companies report that they believe that their suppliers don't understand the cost of accepting virtual and ghost cards. To me, it's like, well, then that's on you, right? You should have an honest relationship. As Devanshu mentioned, you want to manage the types of payments being made. And at the top level, you want to invest in supplier relationships. And as Devanshu mentioned, the AP side of things can offer some low-hanging fruits. We want to have control, right, over when and how that we make payments. And a lot of times the visibility, people don't understand the discounts that they're making. And at the end of the day, let's make educated decisions. We'll talk about this later. We want to make data-driven decisions, right, about how and when we're paid. We can take control of that. We can collaborate with our suppliers. And a lot of times people aren't aware of what's going on. So again, some results from a survey that I've just done. Why do you pay suppliers a certain way? It's not processing costs. That's like 30%. So business as usual, convenience for our staff. And so as Treasury, if we don't have AP, we need to take a look at that. We're doing a check run only once a month. Why are we doing that? We're missing discounts. And so there needs to be data-driven decisions. There needs to be a strategy. Business as usual in today's world is just causing you an inherent drag on your bottom line. And no payments related risk exposures. We talked about this. Map your entire AP process end to end. Again, we have webinars on this. Those related to people, your internal people, your process, and your technology. One of the biggest impacts you can have is educating your people. Anyone involved in the payments or AP process, you should have training for them to help them understand what risk exposures are, how they impact them, and let them know that you're watching them, right, on fraud. And this also goes to email scams, BEC scams. And so education is a relatively low cost way. You want to identify risk exposures by payment type. There's different risk exposures, whether you do an electronic payments, right, or checks or whatever types of payments that you're doing. You want to leverage tools and best practices, right, used to identify. So there's a lot of survey information out there. AFP has some good surveys, strategic treasurers. They share with you what others are doing to mitigate these risks. Ask yourself why not instead of why, right? What are people doing for checks? What are doing people for BEC? What are people doing here, right? Again, educate people involved in the process. And then you have to establish and monitor controls to mitigate those risk exposures. So Devanshu, I know risk exposure management is really important to you. Is there anything you want to add here?
Yeah, I mean, risk is obviously ECA has a very strong risk platform, starting from pricing risk all the way to currency risk and interest rate risk, and obviously liquidity management.
Right.
But I kind of like the way you are actually emphasizing on account payable, because like I said, I mean, it's a low-hanging fruit, and you can actually start just by creating awareness, doing some automation of certain processes. You can do electronification and go all the way. If you especially are a big company and you are dealing with a lot of smaller suppliers, it's very important to have a solid relationship with them. You are a big company and you can borrow money at a cheaper cost. Why can't you pass on that benefit to your suppliers by paying them faster and unlocking their money, right, which is stuck? They do the reverse factoring or the supply chain finance. So you can go as sophisticated as that, and today's treasury solution like ours are actually providing that capability. It's very, very important to make that supply chain seamless and maintain that relationship. Pass on your benefit to your suppliers and and see the huge return they provide.
Absolutely. Thank you so much. And then we kind of touched on this, right? You want to optimize your DPO, just as what you're talking about. Optimize that supply chain. Less is always not better. You need visibility. You know, we want to mitigate the time it costs, right? If we have 210 it doesn't matter if it takes us more than 10 days to process a payment. We need visibility. We need dynamic discounting. And so give yourselves all these tools. At the end of the day, we're going to talk about it later. It's about data-driven decision making, right? Let's know the risk, let's know the rewards, and let's make sure we're making educated decision. How do we mitigate risk exposure? Seems like common sense, but I like to talk about common sense. Visibility in your exposures. It's not always easy to quantify your risk exposures by source and type. You need visibility. I think a lot of us were forced into this back in 2008, 2009. But not only do we need to know what's out there, but what are some emerging risk exposures? You need to make sure that you're in the know, right? Are you gonna take on new suppliers in different countries? How is that going to work? What are the dynamics you're going to do in acquisition, right? What does that look like? What does that growth look like, right? And so you need to be tuned into that. We need to be ready. We need to be ready for growth, right? We need to empower growth and business agility. And then we need to invest in each counterparty relationship, which is just what Devanshu just spoke to very well. So let's flip the script a little bit. Mitigating accounts receivable costs. Again, you can't manage what you can't see. A lot of times, accounts receivable is managed in silos. So we need to get visibility internally, right, to all aspects of that. Now, you know what? We need to be nice to sales. We need to collaborate with sales. Sales is our friend. And we need to be really cognizant of the tone and tenor of all of our communications, right, with our customers. Last thing we want to do is cause friction with our customers. Every interaction with a customer should have a desired action. If it doesn't, you need to teach your people not to do it, right? Of course, we want to minimize the time spent on non-value activities. We want to manage the type and timing of receipts, and we want to invest in customer relationships. We want to mitigate asymmetries of information. Again, really quickly, we want to partner with sales, right? Make sure sales is involved. When you look at that customer success metric, believe it, AR can have a big impact on that, right? And so we don't want to cause any friction with our customers. And so DSO, again, the same prospects. And so what you do is you look at AP, you go, oh, that makes sense. And then you just kind of flip the script a little bit on AR. You can just kind of take the words supplier relationship and put it with customer relationship. At the end of the day, every business relationship matters. And the better business relationships you have, the more control and influence you can have on your cash movements, which optimizes the value delivered by Treasury. Just real high level bank relationship management, right? Not only your Treasury services, but your cost of capital. I've done a few webinars on this. Some of it's about just communication, right? I think during COVID, we've learned these things. Honest, proactive, especially if you were going to run up against your covenants with COVID, right? You want to be a good customer, and that's something that not enough companies do. Allow them to help me help you, right? Let them know what's going on. Be okay with delivering bad news they're going to find out, right? Ask them, right? What do you need from me? Let them know what you're doing, right? Align on your expectations. And I think we've learned on this through COVID is let's make sure we're on the same page. That's where friction happens. No relationship is perfect. Relationships that matter go through a crisis. And if you are upfront about a crisis, take responsibility. Let people know what you can control and what you can't control, and be honest. And that's where relationships are forged. Measure, monitor, and communicate bank relationship success metrics. Have an understanding of your bank's RAROC model. And then if you're using a bank scorecard, let them know what that is. Communicate, right? Honesty, authentically, and that'll help on that front. Supplier relationship management, again, same things, just flip the words, but it's always got to be top of mind. Just think of it this way. Everyone that deals with the supplier needs to understand they are impacting that relationship, and they need to understand that value to your company. Everyone that impacts the customer need to understand, right, that value there. So supplier relationship management. And so let's talk about data-driven cash management and get into the how it's done and how technology is letting us do that. Before we do that, we're going to have our next polling question here. And so before we start to talk about technology. Just want to do a real level set and be honest. I'm not going to tell on you. Do you believe that Treasury has the data and systems to manage cash effectively? I appreciate everyone's consideration in answering the polling question. Those of you interested in receiving CTP credits, again, you'll have to answer all of our polling questions here. Once again, we'll go ahead and leave the ability to respond for the next 20 or 30 seconds or so. I want to make sure that we give Devanshu enough time to drive through his part of the presentation, which is incredibly important, which is the how. I don't think we get that enough on webinars, the how, right? These things happen. These are best practices. Well, what about the how it's done? So I'm going to give you guys another few seconds, then we'll go ahead, take a quick peek on that, and then I'll just kind of comment as to where this sits relative to what I've seen, and then decide if we have to do a little bit of a reality check a little bit. When you really, if you haven't really been looking at all the dimensions yet, you might think that you have it all nailed down, but in reality, you might be some missing pieces. So let's go ahead and close that. Let's go ahead and take a quick peek here. We have 71% of the people agree or strongly agree. I certainly hope that's the case. In practice, I would imagine if I went out to all your companies and really sat down and dug in there, maybe I'm not trying to say you shouldn't agree, but I think sometimes we don't know all we don't know, and there may be blind spots there. But this is about what I saw in the survey. I saw probably even more than this, folks, that said they strongly agree or agree. But then when I look back and tied it all together about how they manage success, how they manage cash, how they manage AP and AR, I would say that I don't think they really have those things buttoned up. So just to put a little context on there. And so let's dive in a little bit. Visibility and reporting drive better data decisions. So what type of visibility and reporting drives better decisions across the enterprise of cash? Well, a unified view of cash positions across the globe. This used to take days or weeks. Visibility, right, that empowers AP predictability, AR predictability. So we need to understand the why it's happening. So before we were always concerned about, there's the bank activity. I want the bank activity. I can't see the bank activity. That's fine, but why? Why are these things happening? Why are these movements happening? What control can I take over them? You need visibility in your currency and counterparty risk exposures, real-time visibility into your liquidity forecast, right? A unified view into capital structures. We would love insightful custom dashboards, right, for the decision makers, right? The CFO dashboard is not the same as a treasury analyst dashboard. And then the right performance to the right people. So what I'm going to do now is I'm going to hand the floor over to Devanshu, and what he's going to do through showing us some screenshots of leading technology, show us what these things look like in practice, and then also share with us the value that delivers to treasury and finance leaders. So Devanshu, why don't you go ahead and take the floor over and drive us through some of these screenshots of this tremendous technology. Thank you.
Yeah, thanks, Ernie. So just real quick, so pretty interesting that 72% of people feel that they have the data and systems. Now it is very important to tell that the data exists. Treasury is sitting right at the center of all the systems and all the departments and functions. They are able to see the data. They're able to access the ERPs and other trading systems and all kind of systems. But do they have ability to understand what story the data is telling and take decisions based on that? So that they can. So their goal is to become more and more strategic and add larger and bigger value to the organization. So are they able to use that data to do that? And that's why these systems, which I'm going to take you through, comes very handy because they present that data in a unified fashion. So data coming from various systems, AP system, AR system, all the ERP systems, trading systems, your custodian systems, and all of that ecosystem of systems which the organization is using. The data flows in and we get a unified view and represented in a beautiful and very comprehensive manner. So this is one of the dashboard which are inbuilt business intelligence tool, which is part of our treasury solution, provides very clearly tells you how your cash balance is, what's the state right now, what's uncleared, what's reconciled, all the way to breaking it down by what your banking partners, which money is lying in which bank, and also tells you very nicely how it is spread across geographically, in which country and in which currency your money is lying. So nice view, very quick view, and it cues you to take decisions. Now the lower section, which is bank balance versus target balance, that is a very important metrics which we should actually try and do, because it tells you that how much money you should keep in your bank balance. If your bank balance, if let's say the minimum balance is 10k and maximum balance is like 500k, that's a good spot. So you shouldn't be keeping more than 10k in your account. Let your money do the work. You should move it to your investment pools, to your investment portfolios, and make more money out of it. So I think that is very important, that we have a very good sight of what's your current bank balance and what's your target balance. And not just that, allow from right here to make investment decisions. So that's the next step of it. So, and now again, in terms of currency, so this offers a very good view of what kind of cash is actually across in what kind of currency. So you can see in the British pound what type of money is sitting there. You can see in euros, you can see in Aussie dollars, and also you can see how your transactions are happening. Are you doing more credits or are you doing more debits? So what money is coming in, what money is going out? So that actually tells you a very good pattern. So this kind of information comes very handy. So, and then Ernie very nicely he talked about, and the survey also said that cash forecasting is very important. But I think what is more important is how accurate your cash forecasting is. If one can do the cash forecasting automatically, obviously it reduces the manual effort, because otherwise one has to key in all of that data, pull all of that data from various systems, upload it, and then centralize it across your 20, 30, 40 business units, and then have a view. But what happens if that is still not accurate? So many people have been able to automate it so that you can get the cash forecast centralized, see the picture like you can see, but it is very important to make it accurate. And that's where machine learning and artificial intelligence comes into picture. Uh, Hours and hours and days is taken to train these machine learning models. In our platform, we train these machine learning models. On the left side, you see these are the transaction types. Individual neurons are actually trained in these parameters, and then we are able to produce consistently 85% accuracy, as you can see on the right chart. Now, important to know, these days it is more important to look at short-term liquidity versus too much long-term liquidity. That's how volatile current scenarios is. We are going through that kind of a scenario, and you can see the model here actually is pretty accurate for next 6, 7, 8 months, and then it diverges a little bit to 15-20% inaccuracy. So fair enough. So that's what these kind of models do. So as long as it is accurate, it's great. And then these are the dashboards. You can see how your forecast of next 12 months or next 13 months, 13 weeks, all of that is happening with respect to various currencies. So this tool very nicely allows you to slice and dice the data by entities, various entities you have, by various plans which are submitted over a period of months. So you can see the April plan, you can see the March plan, May plan, and the June plan. Or you can flip this chart, which is a yearly chart, into a weekly chart. A lot of time people follow the 13-week cycle. So you can right away, you have the data, it's sitting in the in-memory database. The cloud processing power is huge now, and you can immediately pull that data and convert that from 12-month cycle to a 13-week cycle just by clicking a radio button. So this dashboard and this utility actually enables you to do that. And then this is again, Ernie was talking a lot about AP and AR. It is very important to look at both aspects. Like I said, account payables we can control, easy thing to manage, easy thing to automate. So we should at least nail that. And then receivables is also very important. We should have a good view of the receivables. because imagine if you are not able to run the account receivables properly, then it ends up in a collection, and the cost of collections is very high. So what you can at least do is incentivize people to get the money or pay the money on time, not before time, but on time, so that you reduce the cost of collections. So this actually tells a nice way of your account receivable along with account payable. So again, same thing represented with respect to the currency. So account receivable and account payable. If you are a global company, it's okay. You may be having enough account payable globally, but do you have enough account payable and account receivable in a particular currency? So you need to see and slice and dice it down to the currency level. And this actually allows you naturally to do that. And it allows you also to use the FX translation rate. You can choose the translation rate on your own to translate it into various currencies which you are using. So that's an interesting dashboard. And then my favorite, which is the capital structure, very important thing. So obviously we would, first of all, what we would like to do is to manage the price risk. Whatever commodity, whatever goods we are selling, we are always exposed to price risk. So we should definitely manage that. That's step one. The step two is that we manage the liquidity and we manage the foreign exchange risks as well. But then what is important is, in case you need money, you need to have the right capital structure, so that in case of any shortfall of money, you are able to draw your money, draw down on the capital and on the lines of credit, and create a very effective credit facility. So this tool which we have allows you to take it to 3 level deep. You can actually have a credit facility at the top level, which can be broken down into tranches. You can have facilities which is more focused on fixed loans, line of credit which is more focused on floating loan, and also on underlying instruments like letter of credit and guarantees. And then actually you have a relationship with your bank or the syndicate composition of the bank. So you can see, are you exposed to too many too much is exposed on a single bank. Like in this case, you'll see that WFC bank, we are too much exposed to that. What if they are not able to give you the credit? So that can actually create problem. And by bank, you should be seeing available credit limit and what actually the total credit limit, and also by the tranches. So like on the rightmost section, tranche available credit limit clearly tells that I am running out of my floating rate borrowing capacity, and floating rate is a cheaper rate. So why should I get rid of that? I should do something to actually enhance that. So this is a nice chart. This is a nice utility which actually allows you to take a holistic look of that. And putting it all together. So that is absolutely critical and absolutely necessary. So for a CEO or for a CFO, everything should be visible, everything should come at their fingertips. And this is what it allows. This dashboard puts everything together. So for example, obviously you are seeing your commodity risk, your interest rate risk, and currency risk together. How much have you hedged? How much you should be hedging? What is suggested, so you're able to see that. You are able to look at your tranches, what kind of money in the credit lines and credit facilities available for you. You can see by syndication composition, are you exposed to any one bank too much? And then the nice little chart is the utilization headroom. Over a period of time, the green section actually tells you what is your drawing pattern. So how much loans or lines you are drawing, how much you are borrowing, and then the blue section tells how much headroom do you have. So that's the headroom utility. The more the blue section, the better it is. So in between, actually we are seeing that the blue section is actually reducing, and then the loans are getting maturing, and then the blue section goes up. So there's still a good position to be in, but very close eye needs to be kept on this by the CEO and the CFO. So this is everything together. And then in the liquidity forecast or cash forecasting, one of the utility we have capability is to compare plans. So every month, for example, all the business units, all the entities are submitting the 12-month plan or the cash forecast. but are we able to right out of the box compare this month's plan with previous month's plan or the month before that? Are we seamlessly able to do that and see what went wrong? I think it's very difficult to do that in most of the utilities currently we use. I mean, Excel, obviously we cannot do that easily, but most of the solutions which are there in the market is unable to do that. Now, our utility actually presents this right out of the box. So you can see that you can compare this month's plan by a particular entity or at the treasury level versus last year's plan and see where exactly is the biggest variance. Do that variance analysis and then fix the problem.
Yeah, let me jump in here. We're getting some questions, and I have the same question. What are the different lines of the different colors? Are those different scenarios, or what are the different lines that we're seeing here?
Yeah, so I think the different lines are there should be actually a legend as well. So like, for example, if you see the blue line here, the light blue line, that is the plan which was submitted in April, and that goes from April for next 12 months.
Right. I got, yeah, and it's rolling forward, yeah.
Right, so that was submitted in April. The green one which comes next was submitted in May.
Gotcha.
Then we go and get to the June, which is the orange one.
Got it.
And then there is a one which is submitted in July, which is kind of a purple one. Now you can see how it's not really aligned. I mean, there is too many variations in just 4 months. So we should be able to figure out, for example, in the month of December, you see that orange one, there's a huge 88K spike. And orange is, when in June, I said that we will be needing that much of money. But just before that, if you look at the green one, we were not needing that much money. So green and blue and purple seems to be close. But what happened? Why was there a spike in the month of June? So something wrong happened there. So we need to fix that. And when I'm saying wrong, it's not in our process. It's basically how we are assessing the business scenario. So we need to fix the input. So great. And then this is pretty interesting. Same coming for going further very quickly, again going by the currency. But what is really important is variance from the last time. We would like to maintain the second box, which is variance from last time, to as low as possible. If we are predicting it accurately a month before, we should be predicting similarly a month after that, right? So we shouldn't change too much. So that is a very key metrics which we try to track. Then hedge ratio, how much are we hedging? If we are exposed to currency risk, or even if we are exposed to commodity risk, or to an extent interest rate. And then available credit is another metrics which should be available at your fingertips. So that's another thing, another metrics which we track very carefully. And then the liquidity view actually comes at the bottom to give you a nice view of the 12 months. Great. Yeah. So now, how do we build all of this? So we does the treasurer have control in building the reports and dashboards of their choice? So yes, the answer is yes. We have the inbuilt business intelligence tool in this platform. It's just a matter of you have data with you, you select the data, you drag and drop the attributes. So do you want to see closing balance, opening balance? Do you want to see the commissions? Do you want to only see the salary expenditure? So select the data point which you want to see. Select the chart. You want to see it as a line chart, bar chart, or as a pivot, or as a table or a grid, or in simple Kanban cards. Whatever methodology you want to use, you can use that of your choice and present the data in that format. So this utility built as a part of platform allows you to configure your own data views and charts. And then again, so you can combine a bunch of data views and make a dashboard out of it. So you can combine 5 different data views. One is a line chart, another is a grid, another can be Kanban card, another can be, let's say, a stacked chart or a bar chart, and combine it together. So you select the chart, you drag and drop the charts onto the dashboard. You also can set permissions. So you may not want to show that particular piece of information. For example, you don't want to show what kind of payment is going to be happening next month to everyone, because it's a treasury function and you don't want your entities or business unit to see that. So you can set permission for them to not see it, or at least to not modify it. And then you can set filters across. So if you are actually you are a treasury, central treasury, you want to see by treasury function, which is across BUs, or you want to go by a particular entity, or you want to go by a particular currency, and you can filter those things out. So this tools allows you to do that right out of the box. And then yeah, so pretty much
there
yeah.
we go. All right, thank you so much, Devanshu, for that. It's an amazing technology. To me, what sticks out as a treasury practitioner, in addition to the visibility of cash position, but it is the risk management side and the easy ability to look at our facilities, get a control over your risk exposures, and then that capital structure piece. So there's so much power there, and you can put it all together and that's relevant to the specific parties. But to me, when I was back in Treasury, I wouldn't even imagine that I could see like all my exposures in one screen like that on the risk, interest rate risk and that. So thank you so much for sharing that with us.
Absolutely.
So let's talk about the end game, right? We talked about cash management. At the end of the day, what we really want is influence and control. So part of my survey, and this is probably one of the most powerful charts I've seen, or if I've done, and this is what matters. And you should think about doing this for your company, right? You're looking at, do I manage cash effectively? Well, what kind of control and influence do you have? Do you even have the ability to do that, right? In the treasury seat, if you don't have control over accounts payable, accounts receivable, I don't know what's going on with operational risk, I don't have control of treasury technology, well, there's a huge inherent barrier for you to being able to achieve success. And so we asked the question to the survey participants, let us know in these given areas that impact cash management success. Treasury technology, do you control that? What's getting used? What about AP? Does that report up through you? Do you have control? Influence, minimal influence, no influence. What about FP&A? What about the operational risk management? And what we saw in the survey was that even though operational risk management was under the control of Treasury, often, of course, interest rate exposure to the financial risk was as well, and commodity exposure, right? But that wasn't how we measured success. And as we've just seen, right, optimizing how we manage that risk is extremely important, right, to our bottom line. And so, again, the light blue down on the thing should be a darker blue. So the direct control is actually the dark blue number. And so just interesting for me to see. Direct control, I'm glad to see 40% AP and AR. FP&A was pretty high, which was cool, and operational risk management. And so I'm glad to see that direct control. What would concern me if you're looking at this? If you have minimal influence over AP and AR, that's a big no-no for Treasury. We definitely want to have visibility. We want to build that up, right? So if you can't get that direct control, at least get indirect control and make sure that people are making data-driven decisions and then no influence at all. So this is something where you can really see, right, where you're at, where you want to be. And then these are some of your inherent barriers. If you don't have control over these areas, how do you manage your relationships across the enterprise to really take more of that control? And then this question is really what says it all, right? What's your control and influence with the C-suite? We asked folks, are you viewed as a transaction hub? Don't really get much consultation time. No one asks you for information. Provide both transactional and strategic guidance to the C-suite in some instances. And then where we all want to be is to provide both transactional and strategic guidance to the C-suite, right? Frequently consulted for decision support related to growth and innovation initiatives. And so, and as Devanshu mentioned, we have access to all this information, right? We should help control the technology. We should be looked to provide transactional and strategic guidance and all these times. We are the right place to go. We need to communicate that, right, to the C-suite. Only 14% of us are there. 48%, it's 38% seems, it's pretty high. I guarantee if I had taken this survey about 10 years ago, that number probably would have been about 60 or 70%. Devanshu, any thoughts here? Any momentum that you see that's keeping us from having more of us in that gray area?
In last 1 year, I mean, since the pandemic, this number is really changing very fast. So the
Right,
blue section and the gray one is actually changing very fast. So that 38% is reducing by month. And also the aspirational side. So one is how the C-suite is envisioning us, seeing us, but what's our aspiration? So our aspiration is to definitely have that yellow thing become more and more gray. So we do
right,
strategic as well as transaction. And actually in last 1 year, this is actually becoming a reality. And that's why this is forcing the treasury function, the CFO office, to do digital transformation.
right,
And the fast way to do digital transformation is not to do it on your own, but to partner with people who have experience doing that. And that's how the ecosystem is becoming. That ecosystem becomes very well. Partner with people who can do it well, leverage that, and produce results fast.
right. All right, so let's get back. Let's wrap things up with some recommendations, specific things that you can do, best practices, things that you can use after the webinar. You should review all the metrics your company is using related to cash management, debts and investment, and operational and financial risk management, right? Assess if you're using the right metrics. We need to be able to define success and communicate it, right? Are your metrics, are they valuable in defining treasury success, but also delivering value? Are you missing any metrics that can be used? If you're missing metrics, all right, do you have the data that you need? How do you get the data that you need? Do you have the system that you need, right? How do you get invested in that system? Do the cost benefit. Invest in formally defining success and engage the C-suite. Invest in the right technology. I think that we've shown, certainly with cash management, but also beyond, we need to right size technology. What do we need that technology to do for us to deliver the most value and earn that seat at the strategic table and demand it and have something to back that up, right? We need to mitigate time spent on unvalued activities. 360 visibility about all processes and activities across all those dimensions that we mentioned. Enable communication and collaboration, not only within your company, but outside your company. Let's all work together internally, be on the same page. And let's not have asymmetries of information on purpose. Not only do we want to make data-driven decision making, we want to empower our partners to make data-driven decisions as well. Functionality needs to allow scenario analysis, incredibly important, and that was incredibly powerful about what Devanshu showed us. We didn't have time to go through it. I encourage you, after the webinar is over, you'll be able to indicate an interest to learn more and talk to our experts at EDK Software to really look at the scenario analysis. It's just incredible. I used to do FP&A surveys, and only like 10% of the things in FP&A and cash treasurers could even do scenario analysis without a lot of effort. So it's incredibly powerful. And then invest in communicating that success effectively. So we want to provide both transactional and strategic guidance to the C-suite for decision support relative to innovation and growth. So let me go ahead and I'm going to launch our final polling question. Devanshu, I'd like to ask you a question on the technology front. What have been some of the advances that you've been able to do at EKA this year? And are there things that we should look for going forward, where they're going to be any more of a focus than they are now?
Yeah, absolutely. So I think two key points. So software as a service is an old thing. Now what is becoming is cloud native. Cloud native means the solution is born on the cloud, and you can use whatever you want the most and turn on and off whatever you don't want, right? So that cloud native allows you to get continuous supply of increased functionality on as your need evolves at a very, very frequent basis. So that's one thing. The cloud native solutions like ours is actually becoming a reality and is becoming almost mandated by most of the organization. That's one. And then the second thing, which is my favorite, is the low code, no code platform. So what that does is it allows the end users to stitch together the solution themselves. So if they want to do something real quick, they can, it's a low code or a no code way of drag and drop, look at the business scenario, see the results, and launch it to your partners, to your team. So that low code, no code way of development for citizen developers, which are like any developer, any business users can become a developer now, and that's the platform which we provide, is actually the most innovating thing happening in last couple of years.
Thank you so much, Devanshu. Well, first of all, I want to thank you, Devanshu, for taking the time to join us for our webinar today. Sincerely appreciate your insights. Very exciting things going on in the technology front. So thank you, sir. Also want to thank EKA Software, Thought Leadership Partner. Again, they have a strong commitment to thought leadership. And again, in the survey that will launch right after we finish here, you'll have the opportunity to request to be connected with them. And finally, to everyone on the webinar, we value each and every one of you. And thank you so much, everyone, and make the rest of your day great.